In the money line tonight, the Dow Jones Industrials down more than 2% on concerns in part about the nuclear crisis in Japan. The Nasdaq, the S&P, both down almost 2%. The Dow plunged right after a European Union commissioner came out and said the situation in Japan is, quote, essentially out of control. Moments later, a spokesman for the EU acknowledged the commissioner had no specific information, and the Dow Jones Industrials then recovered, at least temporarily. It did sell off, but not to those levels. The losses are mounting around the world. On Wall Street, the Dow is down 3.5% so far this week. And that brings us to tonight's Market Masters. Joining me now are Peter Schiff. He's the CEO and Chief Global Strategist at Euro Pacific Capital, and David Walker, former Comptroller of the United States, President and CEO of the Come Back America Initiative. David, good to have you with us. Peter, thank you. Let's start, if I may, with you, Peter. The market today selling off as it has throughout the week. What should we expect in the equities markets?
Well, you know, we had a very big rally, and so now there's been a reason to sell. People had some pretty big profits. But I think the real concern for people who understand what's going on is that the earthquake in Japan can set off a financial earthquake here. Because, you know, we owe Japan, the U.S. government owes Japan close to $1 trillion. And if you think of their treasuries as a rainy day fund, I mean, it's pouring over there. So they might have to start cashing in some of these treasuries, which means we're going to have to pay up. And so either the Fed's going to have to print a lot of money to buy those treasuries, which means more inflation, or they're not going to step up, which means much higher interest rates, and we're right back in recession.
You're not satisfied by the Japanese assurances and the Bank of Japan's assurances that there will be, they're not going to resort to selling U.S. securities?
Well, what else are they going to do? Just go, they're going to go out and borrow new money rather than just cashing in their low interest rate at U.S. Treasuries?
Well, they've got a printing press too.
But why use it? Well, see, what Japan needs right now is a stronger yen, because they need to buy a lot of natural resources. They don't need to create inflation and drive prices higher.
David Walker, are you concerned as well?
Well, I am concerned. I mean, frankly, the largest holder of our debt right now is the Federal Reserve. And they're going to end up owning more than Japan and China combined within a year on our current path. The other thing I'm concerned about is that the Come Back America Initiative, along with Stanford, is going to issue a ranking of 34 countries in the world next Wednesday, where the United States is going to be a lot closer to the bottom three than the top three for fiscal responsibility and sustainability. You know, we've got serious problems, and Washington's talking about short-term spending and not dealing with the true threat that lies ahead.
Well, here's the threat that's clear and present, if you will. Japan, the third largest economy in the world, is absolutely racked now with unspeakable disasters and unthinkable crisis with its nuclear power plants and its economy. What do you expect to be the impact on, Peter, the Japanese economy and the global economy, most specifically the U.S.?
Well, clearly the impact here is very negative for Japan, because their production is being disrupted, their output. I don't know what's going to happen with radiation, but I do know that Japan is a major global creditor. Japan has been lending money all around the world, and now Japan is in a position where it needs some of that money back. So if you have one of the biggest creditors all of a sudden needing more money, that is a game changer. And you already have problems in China. I mean, China is suffering a lot of inflation as a result of all the dollars and treasuries they've had to buy, because they have to print up their own currency to do that. So I think it could create a lot of problems for the United States, because who is going to lend to us? Who is going to finance? We have a $1.6 trillion deficit in fiscal 2011. And what about next year? And, you know, we have very short maturities on our debt.
I'm looking at the Treasury market, and I see that for 2 days in a row
it's up. It's up now, because maybe the Fed is in their mind.
I haven't finished the sentence, actually, Peter. For 2 days in a row, it's become the safe haven of choice, not gold, but U.S. securities. Surely that gives you some...
I don't think they're the safe haven when the dollar today is at an all-time record low against the Swiss franc, when the dollar is at a 16-year low, almost a record low against the Japanese yen. That doesn't look like a safe haven to me. In fact, the U.S. dollar index, which is a basket of currencies, is very close to the lows. I mean, the dollar is not rallying despite everything that's going on, which should tell you that it no longer has that safe haven status.
Do you agree with Peter, David?
Lou, we are a temporary safe haven. But if you look at what's going on with regard to our spending policy, our deficits and debt, if you look at what's going on with regard to our monetary policy, we are going to have real problems with regard to interest rates and inflation and the value of the dollar over time if we don't start developing a plan that will deal with the 88% of the budget that Washington is not even talking about, and engages in comprehensive tax reform that will make us more competitive and generate more revenues.
Yeah.
The 88% solution, referring to entitlements, and by the way, I'm on your side. I'd love to see fiscal responsibility return to Washington, responsible government.
I think it's too late for a plan, though. We need action. We just can't talk about things that we're going to do in the future. We need to do concrete things right now. We need trillions of dollars of cuts right now. Right. We can't just say, well, we're going to do something in the future and have a plan. We don't have a long time. I mean, it's a very short fuse on this bomb.
You know, Lou, I think the real key is going to be the debt ceiling limit. I apologize. What we need to do is do something concrete in conjunction with the debt ceiling limit that will force tough choices on this, the 88% they're not talking about, that will get us to comprehensive tax reform sooner rather than later. That's what we need to be doing.
Now, you know, listening to you, watching you gentlemen, are people who are saying, my God, they're talking about reducing the size of the federal government, reducing spending. That will be depressing to the economy rather than stimulative, because they have been inundated with all sorts of messages saying that the only way that you're going to have a job, the only way you're going to be able to make a living in this country is if we stimulate the economy, as if we haven't been stimulated.
Well, government spending doesn't stimulate the economy. It's a drag on the economy. The productive sector of the economy has to support all this government. Look, in 1900, I think all government, state, federal, and local, only spent 5% of the GDP. Before the Second World War, I think it was up to 25%, but we had strong economies. We had an industrial revolution. We had massive economic growth when we had a small government. Right. The key to having a strong economy is shrinking government and liberating those resources, freeing up the private sector to really grow the economy.
Lou, the truth is, I just flew in from London this morning to be with you today, and the fact of the matter is that they're trying to cut too much too fast. They're trying to cut 20 to 25% in 1 year. We clearly need to be cutting more than Washington's talking about now, but over a little bit longer period of time. But the real threat are the entitlement programs, the mandatory spending, and an outdated tax policy. And the day of reckoning is coming, and we've got to do something concrete in conjunction with the debt ceiling limit. I sure hope they do.
Yeah. We shouldn't worry about cutting spending too fast. We can't cut it fast enough.
And the idea that we're going to cut it at all, we've got to, in the current budget, as you gentlemen know, the Democrats are talking about 1 day's borrowing. That's what they want to take out of a $3.7 trillion budget. The Republicans are talking about 1 week's borrowing.
They're arguing.
This is playing at the margin.
Yeah, they're arguing over a rounding error. We have a budget of about $3.7 trillion, a deficit of $1.6 trillion, and they're talking about $20, $30, $40 billion. That's nothing.
Yeah, Lou, they're arguing about the bar tab on the Titanic.
Well, that's
when we're headed for an iceberg that could sink the ship of state.
Well, and if you've got a way, and I know you've been thinking about this a lot, if you've got a way to get it done, this is the time to say this is the way. David, what's the way?
Good to be with. Well, the way is in the book Come Back America. Go to the website tcaii.org.
I set you up, David.
There you go. You did a great job, Lou.
Okay, David. Thank you, gentlemen. Peter,
thank you.
Thank you, Lou.
Coming up here next, we'll be joined by the legend himself, Bill O'Reilly. Next, stay with us.